Yo, what's up guys? Welcome to my YouTube channel, Go Trading Institution. Fellow aspiring forex traders. Today I'll be sharing the ultimate guide on how to trade forex as a beginner. Whether you are new to the world of forex trading or looking to enhance your skills, you come to the right place. So grab your popcorn, sit back, and let's dive into the exciting world of forex trading. Now that we are all set, let's start with the basic. I'll walk you through the fundamental concept of forex trading, including the currency pair, piece, leverage, and more. We will explore different trading strategies, analyze charts, and discuss risk management techniques. By the end of this video, you will have a solid foundation to start your forex journey. I promise. Next thing we'll talk about is we are going to talk about some practical examples. I will show you step by step how to set up trading accounts, choose a reliable broker, and navigate popular trading platform. We will explore how to analyze market trend, identify entry and exit, and execute your first trade. Get ready to witness the power of forex trading firsthand. So guys, so I'm going to be talking about the fundamental of the markets. Number one is I'm going to be talking about our currency pairs. Forex is all about trading currency. Each pair consists of two currencies, with the first one being the base currency and the second one being the quote currency. Understanding currency pair is crucial as they determine the value of one currency relative to another. For example, we have the GBP AUD here, which implies GBP is our base currency and the AUD is our quote currency. Just like the way we have gold to USD and this fourth currency here, the GBP USD, our USD Japanese yen. Same thing applies to all the currency you are seeing on this chart here. So alright guys, well, next thing we need to understand is our exchange rate. For example, alright guys, the exchange rates represent the value of one currency in terms of another. It determines how much of quote currency is required to buy 1 unit of the base currency. Exchange rates constantly fluctuate due to various economic and geographical factors. For example, now this is Euro USD. The euro, like if you look at this, the market have closed. By the time I was making this video, this market have closed. If not, if I didn't mean the market is open, you could have been seeing this market going up and down. That is what we mean by fluctuates due to, and it does happen due to various economic and geographical factors. Market mostly does not, the market in the forex market does not mostly stays at one point. It does move up and down, just like the way this chart here is representing it for you. Look at the way it's going up, coming down, going up, coming down. Look at the way it is going up, coming down, coming. So there are always fluctuation in the market. The market is not stable always. So, and as a beginner, that is what you need to learn, how to take advantage, use the opportunity, and make money from the forex market, from the fluctuation that is always happening in the market. Whether if it is going up, or if it is coming down, you need to learn how to determine it and be able to start making money off it and start making advantage of it. So when we are talking about the exchange rate now,
so the euro is the base currency and the USD is the quote currency. This implies that you need 1.06463 of US dollar to buy 1 unit of euro. So guys, this is what it means.
You will buy it at the price or at the exchange rate of this current market, which is at this level. So next thing we are going to talk about is we're going to be talking about our market participant. Forex trading involves a wide range of participants. Like we have the bankers, the financial institution, the corporation, we have the governments, and the individual traders like me and you. The actions and decisions of these participants influence the forex market. Like if they are the way the participants of these traders affect the market. For example, now if the volume of buyers are above the volume of sellers in this Euro USD, now if plenty people are buying this market, This implies that this currency, this Euro USD, is supposed to be, this currency here is supposed to be going up. This currency pair here, this Euro USD, if the volume of buyer here are bigger than the volume of the sellers, it implies that the currency is supposed to be, this currency pair is supposed to be going up. And if the volume of sellers, the market participants of the sellers are performing much more than that of the buyers, then it implies that the market is supposed to be selling, it's supposed to be coming down. All right, guys. So the next thing you need to understand as a beginner is the market liquidity. The forex market is known for its high liquidity, meaning that there are high volume of trading activity and transaction taking place. This liquidity allows traders to enter and exit position easily without significant price fluctuation. Alright, guys, one thing you need to understand is the moment you are in a trade, you have already started taking risks. You don't expect the market to stay in one position. Immediately you start enter a trade, it is a probability that the trade can favor you or you can get liquidated against you. So you need to make sure you know that you have done your analysis very well. Make sure you enter at the right time, because there are some time in the market, that is the evening session, that is the early session when the market opens. There used to be a very, very wide spread. Such time is not advisable to trade, and the time that market is about to close also, such time too is not good at all to trade. Liquidity at that moment is too high and you can easily blow your money. Alright, the next thing you need to understand and take notice of it while trading as a beginner is your economic indicators or your economic calendars. Economic indicators play a crucial role. Economic indicators play a crucial role in forex trading. These indicators include GDP, gross domestic product, interest rates, inflation rates, gross inflation rates, employment data, and other macroeconomic factors. Traders analyze this indicator to assess the health of economies and make informed trading decisions. Another fundamental analysis. Fundamental analysis involves evaluating economics, social and political factors that can. Traders analyze news, economic reports, and geopolitical events to predict the currency movement and make trading decisions based on that analysis. So the next thing you need to understand is your risk management. Risk management is a vital aspect of forex trading. Traders employ various strategies to manage and minimize risk, including setting stop-loss order and proper position sizing and diversifying their portfolio. This helps protect their capital and reduce potential loss. For example, here a trader places each trade here at 0.7270. Stop loss is supposed to be here. For example, it places its stop loss here. Such implies that since a trader believes that the market is going to come down, provided if the market keeps on going against his trading decision down to this level, then he's out of the market. And as a trader, you are expected to have such decision because it controls your emotion, controls your money, and also your account. Because trading without stop loss can easily get your account blown, especially when there is news and when there is spike. So you need to have a proper risk management. And next thing you need to understand is your leverage. Forex trading offers which allows traders to control larger position with a smaller amount of capital. While leverage can amplify profit, it also amplifies losses. So it should be used with caution and proper risk management. For example, now if you have a $100 account and you are using a leverage of 1:200, which means you are using an account of you can open a position. That means the bank have loaned you an extra $2,000 to open a bigger size. Some brokers even offer unlimited. You can trade as you like. Like you can use the $100 to open a one lot. But in as much as you need to know that in as much as you can easily make money off it, such any movement, you can easily blow your account also. Like for example, now from 270 right here to 370 here, for example, from 270 to 370, if a trader is using a lot size, is trading with $100 account, your maximum lot size advisable is supposed to be 0.10, and if you use 0.10 from this level to this level, if the trade goes against you, the highest you are supposed to lose is $10. But when you are using a one standard lot size, just like you are seeing it on this screen right here, and this market goes from this level to this level, then you have actually blown your account. That is $100 already. But same thing applies if the trade goes according to your direction. Just like the way I sold from this level right here, the market goes according to your analysis and it's sold from this level down to this level. If you use 0.10, you'll make about $10, and if you use 0.100, you from this level to this 170, sorry, this 170 right here, you will make same $100. That's how it is. You should understand that in as much as you can quickly use it to make money, you can also quickly use it to blow your account also. So one thing you need to also understand as a beginner is your trading style. You need to understand and plan, strategize your trading style. Forex trading offers different trading style, including day trading, swing trading, and long-term investing. Each style has its own characteristic and require different strategies and time commitment. Traders who choose a style that align with their goals and preference often end up being much more successful. Like if you are coming to come and trade Forex, you need to know, you need to observe and take note which one is better for you, which one does work for you. Is it just try and test yourself, is that when you trade most often, is it that when you trade in the morning that you make money most often? Then is it that when you decide to leave trade for a long time that is always making you profit? Or when you decide to make decision within minutes? Like when you discover that is when you make decision within minutes that it mostly favors you, that is scalping. And when you make decision within hours before it favors you, when your own is the way you are gifted, it's just the same way, that is the trading. But when your own is when you enter a trade, you used to discover that it's after 2, 3, 4 days before, or weeks, sometimes even a month before the trade may favor you. Like long-term traders, it take them week, months, and sometimes years. Some of them do hold position to years, not years. So they are long-term trader. You need to discover and figure out what works for you the most. So next thing you need to understand and master is your emotional discipline. Forex trading requires emotional discipline. Traders need to control their emotions, such as fears and greed, to make rational decisions. Developing a plan and sticking to it and managing emotions are essential for success in the Forex markets. Right, guys, if you are a Forex trader, you need to work on your self-discipline. You need to work on your emotion, because emotions are one of those things that are always making traders lose, because if you don't know how to control your emotion, you cannot hold trade mostly. Emotions will allow you to exit early and enter too early. Sometimes if you don't know how to control your emotion, it will make you to enter trades much more earlier. Your confirmation will not be complete, but you just enter because you feel it is right. But later you discover that you have made the wrong decision. Sometimes your decision will not make you to hold trade to your full potential before you exit such markets. So when you make the right setup, different kind of problems. So you need to control yourself, have a discipline and have a plan before going into trading. Not just trade because you feel like trading and you feel like it is right for you to trade. Congratulations, my fellow beginner trader. You've reached the end of this video, but it's just the beginning of your Forex investment. Remember, practice makes perfect. Keep opening your skill, learning from your experience, and staying disciplined. With time and dedication, you will become a profitable Forex trader, paving your way to financial independence and success. If you find this video helpful, don't forget to give it a thumb up, a like, and subscribe to my channel for more exciting Forex content. Feel free to comment below with any question or topic you'd like me to cover in the future. Together we will conquer the forex market and achieve our trading goals. Thank you for joining me today. Until next time, happy trading, and may the peace be forever in your favor. Take care and see you soon.